Good day. This is your European Open briefing for Friday, June 24th. My name is Michael Florentiades. I am the chief economist here at XM.com. These are the key points. Unless you're living in another planet, of course, I'm sure you will know that the Brexit vote is roiling markets. We had a 52-48 in favor of leave. And we had some news just a few moments ago that Prime Minister Cameron will depart from government. We are all watching developments on several fronts. We are watching, of course, what is happening in London, what is happening in Brussels, in Berlin, in Scotland. There was a very strong vote in favor of Remain, which comes into clash with the leave vote for the rest of the UK and Northern Ireland as well. And we also have central banks watching central banks such as the Bank of England, the ECB, the Fed, with the swap lines ready to face any liquidity issues. Although the market reaction, it must be said, has not been as extreme as some have feared. We have seen some very violent moves. We'll get into that in a second. But overall, markets, I believe, are taking this in their stride at the moment. The calendar today, we have the ifo German business confidence, although it's very, very old news. It was taken before the Brexit result. We have building permits, durable goods, and University of Michigan consumer sentiment final figures in the US. Now, just to get an indication of what's going on, the pound is down around 8% versus the US dollar and around 5.5% versus the euro. And I am saying that this is just an indication. Markets are moving very fast. We have a lot of volatility, so just keep in mind this is just to give you a flavor of what is happening, in a given moment, and the magnitude of the reaction more, rather than giving you up-to-date news, which you will only see with real-time data. The FTSE was down around 7%. It has limited its losses to around 5.5% now. The Nikkei, though, in Japan closed down 8%, not so much as getting after effects from UK exit from the EU, but from the stronger yen, which is the best performing currency this morning. Gold is up around 5%, and oil is down around 3.5%. Now, the US 2-year yield is down around 20 basis points to 58 basis points. So we'll take a look at that and why that is important later on. Now, markets are struggling around the cable. Pound versus the dollar is around 138 right now. Just keep in mind that 138.34 was the pre-Brexit low. That was on 29th February, so before the Brexit news. We had the 138.34 low, which may act as resistance if sterling tries to get above that. For now, 132.25 is the low after the last night's move, and trading is expected to be volatile, but all eyes on pound versus the dollar. I think one of the best barometers right now of what the markets think about this. The euro has been affected, but it is doing relatively well versus the pound. We said it's up around 5.5%. Versus the dollar, it is down, of course, as we mentioned. We are going to have a look at that just now. So the euro made a low of 1.0920 versus the dollar. It climbed back to 1.1150. So from last night, it was around the previous day's sessions. It had crossed above 114, but back towards the lower end of the range. If 110 holds, I think that's a key level. We'll have to look and watch that. Now, let's look at the 2-year yield in the United States. It dipped all the way to 0.5%. Now, just to give you an indication, a rate of 0.5% for the 2-year means that the market does not expect the Fed to raise rates for the next 2 years. So maybe that is a little bit of an extreme prediction that rates are going to stay for the next 2 years at this level. So we see the market adjusting a little higher. It's now at 0.58, but definitely that this should be a key takeaway that it's most probable now that the Fed might hold rates at 0.5% until the end of the year. The Fed was not too keen to raise rates, even if we didn't have this Brexit event. Now that we do have Brexit, then the market expects the Fed to be quite dovish and to keep rates lower for longer, possibly, as some central bankers like to say, with interest rates. Now, in terms of the calendar, we said the German IFO is not so relevant. It's going to it was released, but since the data was taken before before the Brexit shock, it's not so useful, in my humble opinion. We do have some US data later in the day. We have the most important of which is probably durable goods. US building permits, University of Michigan final consumer sentiment also will be looked at, but durable goods orders, those will be watched more closely, expected on minus 0.5%. And the other key element that is going to drive trading today are responses to the Brexit news. I believe they will guide the market, various statements from various officials, what's the next steps, how negotiations will proceed, when will they happen. Maybe today we may not get clear guidance, clear answers to these questions, as maybe this is an event that was not so well prepared, as it appeared that there were a lot of people expecting a Remain outcome. So maybe the dust will have to settle, and maybe over the weekend and Monday next week probably we are going to get more clarity. Probably today some more volatility. So that's all from me today. Thank you very much for watching, and have a great day.